Dear students, today I make one more video about economics, that is national income, which is of class 12 and class 11. So I hope this video you like. If you like this video, you can subscribe, you can share, and you can send you to your friends. This is my own small effort which I present here. So now let's start the video topics now. Today I put about national income, which is of grade 12 economics. We know in national income account there are so many matters. Let's see what are the matters there. The national income account income is include is a GDP, is a GNP, is a NNP, is a NI, is a PI, DI, and PCI. So in the same way, in this unit we have to know about the measurement of national income, and there are three methods: the product method, income method, and expenditure method. In the same way, in this lesson we have to also know about difficulties of measurement of national income of the country. And now we talk about national income accounting. What is the national income accounting? Now we talk about national income. What is national income? So national income refers to the sum of income, yes, sum of income earned by the individuals of a nation in a particular period of time. In other words, it is the national income of the nation in a particular period of time. National income data reveal the total economic performance, yes, the total economic performance, that means output of an economy as a whole. Every society wants to know how well its economy is performing. National account statistics, that means national income tells about the health of an economy. So it tells about the health of the economy. What that means? That means it talks about the matters of national economy, the matter of agriculture, the matter of industry, and the matter of service. In the same way, national income represents the receipt total, expenditure total, and total value of its production. Since we know in the economics, this is the main basic of economics, is that we know about the one man's income is another man's expenditure, and its commodity the commodity is bought and sold. Its market price, national income, and national expenditure, and national national product are equal. Now, as we continue, we can continue now. Every nation's economy produce and goods and services. The sum of market value of all goods and services produced by the economy of a nation in a year is called national income. As a symbolically, it can write as y1, y2, y3 plus y1. You can see here. Is the sum of y1. As a I means 1. Is a where. Is a individual income. Y is equal to individual income. As NI means national income. I means individual income from 1 to 10. Is a various concept of national income now. Now again we talk about the various process of national income. That is gross domestic product. The domestic product is the market value of all final goods and services produced within the domestic territory of a country during a year. It's called domestic production. In order to calculate the value of gross domestic product, all goods and services produced are multiplied by their representative price and sum of. That means is a is a pi qi plus p2 q2 plus dot 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 pn qn. That means we have to multiply the quantity with its price, that price, and multiply with quantity. That means, so that is the price means sum of p and q. That is where p is the price of final goods and services, q means quantity of goods and services, I means final goods and services of a country. Yes. So now as a calculated method we can see as a dv means c plus I plus g x minus 1. What that means is this is the expenditure method. We know that method here very well. So here is a C means consumption, I means investment, G means government expenditure, X means export, M means imports, and that means net exports. Now as a feature of GDP, what is now feature of GDP means? Feature of GDP are as follows. GDP is the monetary value of all final goods and services produced within the country. GDP includes a value of only final goods and services produced in a year. The value of final goods and services is calculated at the current market price. We must take into account only current production. As a GDP includes only those goods which have market value and brought in the market for sales. It includes transfer of payments like it has transfer of payments like pension, unemployment allowance. It are not included. Now we talk about gross national product. Yes, gross national product is the market value of all final goods and services produced during a year by domestically owned resources or factor of production. In other words, it is the market value of all final goods and services produced within the country in a year plus plus net factor income from abroad. That means is a NFIA. It is the broader concept than GDP. Now GDP means GDP plus net factor income from abroad. In the NDP, net domestic product, GDP minus depreciation. So now we talk about feature of GNP. It is also calculated in the monetary terms. GNP also calculated in monetary terms. It includes only final goods and services. It is only intermediate goods and are excluded to avoid double counting. One of the double counting is one of the very problems of national income accounting. So that we have to avoid. In the same way, it includes income earned by all the citizens of a country within the country and abroad. Yes, we have to know about that matters very well. In the same way, it does not include capital gains and transfer payments, capital goods and transfer payments. In the same way, it includes only those goods which have market value and brought in the market for sale. Now, net national product, gross national product. Thus, net national product means gross national product minus depreciation is called net national product. In other words, national product is the market value of all final goods and services after allowing for depreciation. It is also called national income at the market price. So we see here as a that means when we charge the depreciation are deducted from the gross national product, we get it. So depreciation is the one which can if we deduct the depreciation from the GDP, we can find out the net national product. While producing the goods and services, the machines and the other fixed capitals are wear and tear. That is depreciation. It is known as depreciation. By deducting the value of depreciation from the value of gross national product in a year, we get the value of net national product. That means net national product means NNP. So we know that NNP is GDP minus GNP minus depreciation. Yes, I hope You know that matters. In the same way, you can see here is the NNP minus GNP minus depreciation. Now we can talk also national income again. National income is the total sum of earning of all factor of production in the profits, rents, and interest plus net factor income from outward. In the other words, national income means it is the sum of all mean incomes earned by the domestically owned resource factor of production for their contribution in the production of goods and services. There are four factors of production: land, labor, capital, and organization. These factor of production reserve factor reward in the form of rent, wage, interest, and profit respectively. So by the product method, that means NI means PI into QI, P2 into Q2 plus Pn into Q1. So GDP plus X minus M, GDP plus NFIA, GDNP minus depreciation, NNP minus tax, NI. Yes, I hope you know that matters. So national income we can find out in the by this. It is the very product method. From the product method we can calculate, we can find out the national income. In the same way, we talk about the personal income, which is the total income received by all individual and household of a country from all possible sources. Yes, all possible sources before payment of direct taxes during a year is called personal income. In other words, it is the sum of all incomes actually received by all individuals and households of a country during a year. You should know that is the within the year we can know that matters very well. So it is the income which is received by the all individual household of a country in the possible sources before the payment of direct taxes. Yes, before paying the direct taxes, the personal income is found out. So that is the here it is never equal to the national income because the factor of production do not get all parts of income they earn. So all when they not equal to the national income. So for example, corporate income tax or corporate profit tax will be paid to the government from the corporate profit. So we have to pay the tax. That is, if we have the income, but we need to pay the tax to the government. So in the personal income, that is not for all income to the personal people, personal individuals. This is not available to the shareholders, which is known as undistributed profit. Social security contribution, such as provident fund, pension, etc., are deducted from the wages and salaries. On the other hand, transfer of payments in the form of unemployment benefit, old age pension are the income not earned. Yes, the various sources of personal income are labor income, proprietary incomes, rental income, interest income, transfer of payments of social security taxes, etc. Now we can see here PI means NI, undistributed corporate profit minus corporate income minus social security contribution plus transfer payments. Now we talk about disposable income. This is the last one. Yes, in the one of the very important topics in the before PCI. The disposable income is the total income received by all individuals of a country from all possible sources after payment the direct taxes. Is called disposable income. It is equal to the personal income minus direct taxes. It is also known as the personal disposable income. DI means PI minus direct tax. Disposable income is available for household and person for consumption. However, the total disposable income is not spent only on consumption because it is a part of saved also. Thus, consumption plus saving, C plus S. Now, per capita income. The average income of the people of a country in a particular year is called per capita income. Everyone you know about what is per capita income. It is expressed in the current price in order to prices. In order to find out the per capita income, national income of a country in a particular is divided by the population of a country in that year. That means per capita income is equal to national income divided by total population. That is Per capita income concept is enable us to know average income and living standard of the people of a particular country, but it is not very reliable. Why? Because in every country, due to unequal distribution of a national income, a major part of it goes to the richer section of the society, and thus treated by common people, um, and thus received by the common people. It is lower than the per capita income. So that is the matters here. So today this much. In next time also and in next time also I'll put others video. I'll make others video. Please you will see and watch this video again. Yes.